Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Magnite. So why Magnite is interesting, as it's fallen more than 40% in the share price in the last 6 months. I'm going to talk about its revenue growth rate, I'm going to talk about its prospects, its profitability, and then we're going to bring this all together and talk about its valuation. So this is quite interesting. I've been kind of sharing this yesterday, and it's quite interesting. So you can see all these advertising stocks have just really kind of taken a hit, with the exception of Snap that's kind of up in double digits growth rates in the last 6 months. The rest of the space is really down, and I highlighted this yesterday, and it shows that you can see here. So some of the stocks that I highlight here are Roku, Pinterest, Snap. So these are not really companies that have a lot of correlation outside of being advertising stocks. So you can just see the space. It's like there's not a lot of overlap in terms of what Pinterest does and what Roku does, but yet this whole advertising space has been thrown out, and it's not really just because of how privacy concerns are going to be playing out as we approach 2023. It's not really just that. It's just, I believe that the underlying function here is that many of these stocks that had very strong rallies last year, the market is just saying, oh, that was probably COVID related, and we're just dumping that. So I don't think that there's a lot of justification for the case of Magnite to be down more than 40%. So I think this is quite interesting to dig in further. So you can see here Q2 was very strong with 170% year-over-year growth rate. Now obviously that had the SpotX acquisition put in there, but even on the organic rate it's up 70% year-over-year. Now you can say, okay, yeah, Q2 last year was particularly weak, it was always going to be strong this year. Yes, I can see that point. Yes, that is valid, but we're talking about 70%. It's quite a strong growth rate, for a company that's been disregarded totally by the market. So one of the things that I find quite interesting here is that in the case of what Magnite does, it's really a leader in the supply side of the platform. So supply side advertising, if you have let's say a website, or you have any kind of digital space, really, it can be video, whatever, and that needs to be monetized somehow, you go and put that out in a bidding process and in an exchange to monetize that. Okay, so you have the likes of the trade desk that are demand side, so brands would reach for the trade desk if they want to advertise in an independent way outside, let's say, Facebook, Google, or Amazon. If you want to kind of advertise, you'd go for something like the trade desk for if you're a brand. But if you have a website or whatever and you need to monetize that digital space or digital inventory, you'd go for something like Magnite, one of the biggest, probably actually the biggest independent supply side platform. So the opportunity that's quite interesting here is CTV. So CTV is really growing quite rapidly as more and more consumers and households cord cut. What that means in practice is there's a movement towards streaming and looking at TV on a connected basis. So what's really playing out here is that we can see here, you can see that nearly a third of Magnite's revenues are coming from CTV. Now what's really interesting here, obviously there is a bit of the SpotX acquisition coming in here, but we're talking about, in the earnings call, we talk about 50% organic growth rates coming from CTV. So CTV is quite compelling for advertisers because first, it reaches a large audience. Second, it reaches a growing audience. Third, the cost per impression is meaningfully lower than you can get in other digital platforms like social media. So all that together implies that for advertisers you get a very high return on investment. So for advertisers, this is like, that's why so many of these digital platforms like Tremor, like even to a certain extent Digital Turbine, they're kind of trying to get into the connected TV space. They're obviously much more focused on their core business, which is getting the mobile advertising business. But it's, there's this whole movement in these digital ad tech stocks companies that are moving into monetizing their CTV revenues. And you can see here, so I made some calculations and I said, okay, so they're talking about, if we assume that they're growing at organic 50% rate, and we can say that over the next, let's say, 2-3 quarters, and it continues to slow down its revenue growth rate and it comes to approximately 35%, we can say that over the next, let's say, 3 quarters or so, excluding traffic acquisition costs, we're at 185 million just from the CTV revenue. For a company that's priced at approximately 4 billion markup, I think this is quite interesting. So here's some more calculations that I put in. So during the earnings call, they talk about that in 2022, Magnite's going to be at approximately 500 million in revenues. Now, I don't really know what the traffic acquisition cost is going to be next year, but let's say that somewhere at the midpoint of approximately 10%. So that means the net revenues are going to be 450 million. So next year, 450 million of net revenues, that puts the stock trading at approximately 9 times next year's revenues. Now, keep in mind that, you know, the other large independent demand side platform is the Trade Desk. The Trade Desk is priced at 23 times forward sales. So in that light, paying just 9 times forward sales is particularly cheap for Magnite. Also keep in mind that Magnite has a target to get to its adjusted EBITDA margins of approximately 30%. So that's very much in line with what the Trade Desk is doing right now. So you're kind of getting exposure to this space of a rapidly growing digital advertising space and not paying a lot for it. So Magnite also has its investor day today, so that'll be quite interesting to see what kind of visibility they give us into the year ahead. So as always, don't forget to check out my marketplace to find out what kind of stocks like Tremor, whatever, or Digital Turbine I'm particularly interested in, and you're welcome to do a totally free trial to see if it suits you. What's more, you can unsubscribe anytime before the 14 days is out, and if it doesn't work for you, you know, you came in, you tried, it didn't work out, you unsubscribe, you're not going to get charged anything at all.